Back. Sorry for everybody. Sorry for that, everybody. Got the new house. We got a lot of stuff we got to do. So I get people who are supposed to be here at 10 a.m. for a meeting that end up being here at 9 a.m. for a meeting. And, well, here we are. All right, let's have a look. Tilinus, is that how it's said? Yeah, I don't know. I mean, we had a setup. It got stopped out. And then, another little attempt now. Yeah, let's see. I was waiting for a 30-minute setup. Nothing happened there. So as far as I'm concerned, we're just sitting back. I am not taking any trades just yet. I'm going to let this play out. That triple bottom failed, and now it's blasting through it. So yeah, we could have some drama. I'm expecting a lot of drama. We're down 1.5 on Russell, down 1 or so on S&P, Dow, NASDAQ. Hey, NM. Yeah, not really doing any trading today, actually. Good to see you. But yeah, nothing, no trading yet. I've been waiting for my setup, and nothing so far is convincing me that I need to do any trading. Yeah, there's a bunch going on. There's a bunch going on here, NM. We had a really nice Feldval breakout that got stopped out, and that's the thing. Question: am I trading long only or looking also for some short trades? So we do have a vol breakout, the failed vol breakout. If that trade, which is probably where you want to be trading today, sell stop below here, and then watching this thing go, you have a very wide risk range, so it's kind of a pain in the butt. So for me, oh, guys, please hit the like button if you don't mind. Wakes the people up. Lets people know that we're live. And I'm, really, Telenis, I'm just looking to just wait for setups. When it becomes obvious, I'll get in. But at the moment, this is more of a situation that a lot of big money is repositioning the risk on coronavirus. This isn't just day traders. Day traders are getting, mauled on this one. But, for the most part, this big of a move, that means that bigger institutions came in and did, they had to reposition their risk. They were overly positioned or something happened and they were at risk for their exposure. So they had to unwind some risk, most likely. Personally, that's cool. I'm just, I exist in a little corner of the internet that really Bob, thank you. I live in a little corner of the internet that basically is saying like, hey, let's just let's be a little risk averse. Let's lock in some profits that we've had over the year. We've had a great run, and let's look for when the easy stuff sets up. So right now, today is not easy. This week is not easy. We're looking at last week's, January's swing low is next in line. Low 89.25. We're below 8,000 now, or 9,000. So as we break that 9,000 level, now it gets violent. Now we're watching the vol breakout short on here. The 10-minute is now accelerating. That's fine. Fun to watch. But so we're accelerating down. If you did take that dollar yen short failed vol breakout here, I exited yesterday at 1.5 R, but it looks like you're actually going to get the midline, which is a nice. That's a nice one. Okay, failed vol breakout on Aussie on the daily. I'm keeping an eye on that. And honestly, guys, I'm probably not going to have too much insight today. Really, all I'm thinking about is just, when is the easy trade going to appear? And when we get the easy trade, then I'll be looking to get long the easy trade. But for now, we have a big 9,800 down to 8,900. We have a big range. And so now the next thing we have to think of is where do bulls capitulate? Where do they put their stops? Which is, we saw every time one of these stops get taken out, we accelerate and then we have reversal. So 9,000 is just one of those numbers that somebody says, okay, I'm long, and if it goes below 9,000 or if it hits 9,000, I'm out. So you get big round number syndrome. I did a video on this with Bitcoin. Big round number syndrome, meaning that the 9,000 level on NASDAQ, people are going to say, okay, I'm going to buy more at 9,000. The Uber bulls. The people who are scared are going to be, they're going to sell. They got up to 96, where we get up 96.80, somewhere around there, 9,700. Higher than 97. 10,000 was in range. So a lot of people are still thinking 10,000 is in range on NASDAQ. And here we drop below 9,000. So if you're thinking 10,000 is in range, you're at 9,700, you're thinking to yourself, okay, I'm going to put a stop at 9,000 because if it goes below that, we're going to go lower and blah, 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 blah. So you rip through that big round number of 9,000, lots of volatility happens, and then now we can start figuring it out. So as far as it goes, like, sorry guys, I don't have a whole lot of trading advice today or a whole lot of trade setups, because it's just a day where there's a lot of unwinding and every bounce is getting sold. So by the time that everybody discovers that every bounce is getting sold and they start shorting, that's about the time that you start seeing the bounces get hit. A good question. So in bull volatile, I like to trade a lot more of, I mean, I stick with my price action stuff. So, you know, when I get that double bottom pattern, I like to do those. I definitely like to do reversals. I also, due to the ranges we're in on, bull volatile strategy or regime, uh, your position sizing gets dramatically reduced. And if you don't, you find out why you're in a bull volatile real quick. When you're long, add into your longs at 9,700 on NASDAQ and it drops 1,000 points in 2 days or so, then you start to really see, oh, okay, that's what they mean by bull volatile. So instead of continuing to add positions, you want to start taking a little profit off the top on the upside and taking some, finding ways to get in on the downside. But yeah, exactly. Mean reversion is more my game in bull volatile. The other way to do it is to just exit it completely and go find a new market, an interesting market. So we can see gold is not doing a whole lot. Silver just grinding lower. Crude dumpity dump. Yeah, nothing interesting there. I don't trade volatility products, Kestas. I would backtest a strategy in this environment and, come up with it and see if you get some, good, good setups. Like the thing about trading VIX is um, it doesn't work the same as like a directional asset. It pretty much bangs around and not in a way that I have found super insightful. Mostly because I haven't taken the time to do it. I've done a little bit of work on VIX, Kestas, but I haven't found I have much of an edge there that I agrees with my market beliefs. So I find that trading these products, there's people who are way better at it. Like Tyler, my friend in Macrops, he really trades vol quite a bit. It's a good question for sure. But what I choose is to step away until I have just the world's screaming, best setup in the world, with my market regime and a statistical advantage, knowing the setup in that environment, is how I'll want to trade it for sure. But yeah, at the moment, I don't have any. I don't have any opinion on VIX or anything to offer on VIX. It's a good question though. It's just I haven't done the work on VIX. That's all. And generally speaking, so I'm not going to trade something, and I'm not going to I'm not going to go out and do anything on something that I just don't have any advantage on, that I haven't done any work. So especially on a product that it's, you know, the volatility regimes don't last all that long. They become normalized when they last long. And if that's the case, I can, you know, I can find other things to work with. But yeah, it's just an asset I haven't traded. Okay, so we are now below, which low was this? Okay, so we're now below our swing low from February's low. Low was 89.66, and today we got 89.55. So we've gone below that low. Our next low, 89.25. So we're about 30 points away from February's lows. And that's where I would expect to get more, more volatility here. That's very steep. It's very steep risk here. It's just a meltdown. So that's over 5% in, let's have a look. %7.8% off of the all-time high on NASDAQ in a couple of days. So 17, 6 days. So 4 trading days, we've cut about 8% down, almost 8% off of the NASDAQ. That's a lot. Kesta says, so SPY has a gap close at 317.5 with thinking to wait for a bounce here. What do you think? Let's have a look. Not that one. I mean, I don't see any reason to be buying just yet. Let me see what you mean by the gap. Okay, I see the gap you're talking about. Yeah, I mean, the thing is, everybody's watching that gap. So all the traders out there, we're also watching this gap. So you're definitely going to get, those. Let me do ES. Nice trading, Will. So yeah, once we spike below this horrendous January 7th spike low, then we get what's that whole price action thing, right? The people are going to have their stops there. So this thing rips below it like a magnet, and then it spikes and turns like we had over here. And then we come back and do it. So let's have a look. Hourly potential setup on S&P. We've got 40 minutes to go. Same. Across the board. Same. So everything's set up to do a mean reversion trade on whether we're looking at shorting bonds or buying S&P. Let's have a look at our fun little currencies. Okay, we have a vol breakout on dollar yen. Kiwi failed vol breakout back to midline. Beautiful trade. Nice job, Will. Whew, euro. Pound. Interesting. Double bottom long, euro pound. $30-minute on equities. Let's have a look. Kind of. They're a lot bigger. So you may only get like one micro contract as opposed to the big one. Euro franc. Pay attention to this is probably like my favorite setup right now, short bonds on the hourly. I'll be paying attention to that. That's a tough one because we've, it's on a tear. But this would be the place that I would expect. So we've ripped, another rip. Now we do this capitulation move, and then if we can drop, we can bring this back at least to midline. So So NM, I'm more interested in an hourly setup that just screams at me to get in. And I have a potential setup. Actually do have a long setup on Bitcoin there. I don't trade 60-minute Bitcoin, but so that one would have got filled. And still wait to exit there. Good bounce coming. I think you had something there, Kestis, with your look at the SPY. The thing is, you're definitely going to have gap fills. All sorts of traders are going to have their eyes on gap fills. Whether they, gaps getting filled mean anything or not is irrelevant. The fact that people believe gaps are where they're going to be filled, people are going to have orders to get long in there, and they're going to scalp around that and such. So, good stuff there. Let's see what we got on a euro pound. So that one did look out pretty nicely, didn't it? Euro pound, beautiful failed vol breakout, stop out. Actually never stopped out on that one. But we got a much better setup over here. And this is, I don't know if that's 1R. It's about 1R. So much riskier trade. As you can see, the pound looks a lot like bonds. Look at ultras. Ultras are nice. 10-year ultras, nice. 10-year, I'll probably take the 30. Thank you for hitting that like button, people. I do appreciate it. That's how we get people knowing that we got magic happening here, or at least something to come in and ask a question about. I have a couple of people that have. I just want to thank you for the likes, and Mr. F. Thank you. I have a couple of people that have sent me some emails, reached out over the last week or two, and just been pretty hectic. Hectic in the sense that I have a tough time responding to emails generally, but that's the best place to communicate with me. So what are you going to do, right? 6 one, half dozen the other. Apologies. And we should be bouncing. Bonds are dumping. Very nice, very nice. Yep. All right, that's there's going to be some drama down here. Kestas, do you trade VIX, or was that just an idea that you thought, why wouldn't you check that? It's a great idea. I'm doing 4 hours worth of manual back testing every day on different strategies, different systems. And I have a good list of things that I want to back test. That's why I really upped my tempo. And I would definitely say getting a VIX one is something I do. All right, congratulations. Let's have a look at SPY. That's right. It's not that I'm too busy to respond. It's just getting the time and sitting down and going to the place of responding. Especially when I'm doing 4 hours of back testing a day. I need that mental break. I basically have a timer set on my phone, and it plays. So I use this tool called it's called Focus at Will. It's an app, and they have all sorts of focus music in there, and you put a timer on it. And so I put a timer on there for 56 minutes. I'll do 56 minutes of very focused work with my noise canceling headphones here, and massive back test or analytics or something like that. Writing, emails, whatever. Emails haven't been high on my list, obviously. And I do apologize. Sometimes I'm just not there. I'd rather give you a great answer instead of a one-word answer, because I'm just not there. So, but yeah, so I'll do 56 minutes of like a manual back test or something like that, load up a spreadsheet full of stuff, and then I'll walk outside and drain threes in the driveway, maybe grab a coffee, go for a little walk, something like that, 5-10 minutes, bouncing around and just getting out from under my desk. And then I'll come back and I'll do another 56 minutes, same thing, out, shoot some 3-pointers or, you know, attempt to dunk. I'll do like 3 or 4 of those. And then, you know, it's on to from there, doing other stuff throughout the day. So Kestis, I'm always on the wrong side of the VIX monthly options. Yeah, I just don't trade options personally. Not that there's anything against them. It's just I haven't taken the time to put in the amount of work I need to be doing to trade options. And so I don't have as big of advantage on options. And then VIX, as I also mentioned, I haven't put in the time to get the result out of trading VIX in any way. So I don't, I just won't, rather than, you know, losing money on something I don't have, I know I have an advantage in other places. So I focus on those advantages instead of taking things that I think are going to be exciting. Bob, I stopped RLCO. So if you guys don't know, RLCO is Ken. He's one of the instructors at Van Tharp. See you later, Will. Good to have you around. So Ken Long is his name. Ken Long. He's a doctor, Army officer, infantry officer, and you know, fairly accomplished guy. And he developed this thing called the RLCO, which was reversion line crossover. And so that's his thing. I have, Bob, to answer your question, I have traded it and I have, or I should say, I have back tested it and I've traded it. And I honestly, again, back to my point earlier, which was you trade your beliefs about a market. And for me, that meant building my own system that I know how to trade and I own. Like I did the work. So I came up with my idea. Now, honestly, like John Bollinger created Bollinger Bands, Keltner Chat, like all these things are there. I just believed in mean reverting being a higher win rate strategy. And okay, we got that. And also, I really enjoy my system. I think RLCO is a fantastic system. If that's something you want to do, absolutely get in there and back test the RLCO. He's done a bunch of videos that are free on YouTube. You can see what he does. I think he has a bunch of free books in Amazon too on it. It's a great system. There's a million great systems out there. And ultimately, what you want to do is you want to find a system that works for you, that works with your belief system and your, you know, what time frame do you want to trade? How do you want to spend your days? So are my back testing, Crestus asks, are you back testing with historical chart data or with real-time quotes? So I manually back test historical data. And there's a number of reasons why I do this. Well, I can't back test with real time because that's forward testing. But I'll do, like, let's say I'll go back and I'll do a back test on, let's do, and then I'll do, so let's do the SPX because it'll go back to 1870. And then I'll go to here and yeah, let's just go do the 1980s. Okay, so right here is my start point. I'm gonna draw a line and I'm gonna trade the failed vol breakout strategy on the S&P daily from 1980 on. Compressed volatility, busting out of volatility, did not close outside volatility. Closed outside volatility. We're in a sideways regime, so I'm going to go ahead and look. This is almost to the midline. I could take it, but position sizing wouldn't allow it. Nonetheless, that is a potential setup. Okay, now I would be interested in taking, because now my distance from here to here is R, risk. And from that distance, it's twice as long to the midline. So I would go short 111.99, so 111.98, a sell stop below there, with my stop on a daily close above 112.84. I enter that into my spreadsheet. It'll tell me my position size. Next I will, okay, I've hit 1R on that and it's bounced. And still in the trade. And so that's 1R, 2R. I could go to the midline. I could take 1.5R. I could take 2R, but I'm going to document the max favorable excursion. So the lowest this thing got to is 108.87. I'll put that in my spreadsheet, and I'll just keep doing that. And so, you know, this tells me that had I, you know, I'm just going to enter that in there and know that all, you know, here's the trade setup. Here's my max favorable excursion. And I can say, you know, 1R, 1.1R, 1.5R, 2R, whatever. I can trail stop. I can come up with a bunch of ideas, but collecting this data versus having to be right or wrong on it, just collecting that data, max favorable excursion, over a course of 1,000 trades, I can discover, should I be taking profits at 1.1R, 1.5, 2R, 1.5R, 2R, 4R, midline, whatever. I can come up with those numbers. And if I do come up with those numbers, then I can run, I can build my systems around that and just say, okay, I want a high win rate system, so I'm likely going to be taking profits at like 1.1R. And so that's pretty much how those work. So now compressed volatility again. So I'm looking for a vol breakout. I got a vol breakout, but that's not a setup. I can't take it. The position didn't close outside the bands or the Keltners, and it certainly is not more than 1.5R to midline. Still compressed volatility. Now we got to close outside the midline. The distance from here to here is far greater than from the low to entry, so not a setup yet. Potential setup here, but this distance to there is about 1R. It's not 1.5R, so that's questionable. Taking that setup, same. The distance on this one is too hard, but there is a potential mean reversion setup here. But again, the risk was not there, so I, you know, wouldn't have. That's one of my rules. Is the distance from my entry to stop R? Is the distance to midline at least 1.5R? That tells me I have enough room for a potential price target, and it's worth trading. So as you see, that keeps me out of a lot of these trades that otherwise, this one didn't close outside the band, so there's no setup there, even though that one could have been more profitable. And also look at the distance to the midlines, they're just not there. So, and now we're obviously in a nice uptrend. So I'm looking to probably find another maybe hammers at the midline to be my reasons to get in. Okay. Press vol, haven't closed outside it, nothing. Still compressed vol. My guess is we're in a bull quiet, maybe getting up to a bull volatile. Yeah, okay. So we've traveled, as you can see, that's bull quiet, just keeps going higher and higher. And now that we're at bull volatile, we're getting below the midline more often. So, and you can see it's jumping around a lot more, but we're still in compressed volatility. Anyway, I'm sure I've spent too much time on that. Sorry. Bob, maybe a bit involved now, but curious how you capture, interpret the signal when a perfect setup fails. Any pointers how to better interpret it, like checking lower time frames? Any pointers? Okay, so I know that I know my win rate on in a bull quiet is above 70% on failed vol breakouts and vol breakouts. So I know that over 1,000 trades, 300 of them are going to fail. And no matter what I do, just sometimes like today, we had that set up on NQ that on the 5 or 10 minute that somebody might have taken and got stopped out. It's just part of the game. That's just how the distribution works. But if you do find, you can do multiple time frames, and if you have like the same setup on multiple time frames, that is very useful. Let's say you have a Bollinger Band touch on the 1 hour, the 4 hour, the 1 hour, the 10 minute, and the 5 minute. Like that says we're at the bottom of the range, and there's a lot of other things that are lining up. So it's that can improve it a little bit. For me, the biggest move I did was using buy stops to go long. So a tick above the signal bar or a tick below the signal bar to go short. That really moved the needle from that. And then, you just know that you're going to have losers. So trying to mitigate every loser is just, you over optimize and you find yourself in a position where you're missing on the trades that you should be taking. You're talking yourself out of taking trades, and you're getting a false sense of security in that, you've over committed, so that your downside risk is higher. But yes, for sure, Bob, you can do multiple time frames if you're, which is why I have it up on my screen a lot of the time. So I'm trying to get, so as you can see, I can look at basically we're either down at Bollinger Bands or below Bollinger Bands, right at bottom Bollinger Bands on all time frames. So for me, the thing about a Bollinger Band is it's 2 standard deviations of the 20 period EMA. So 20 period EMA is kind of the middle of where price, that's a median price. And if you're 2 standard deviations away of it, oftentimes that gives you mean reversion. And that's an extended move. You can also do 3 standard deviations, 2.5s, all of those. All right, 16 minutes to go for me. I'm going to cut it at in about 15 minutes. I'll watch the hourly update, maybe place some trades out there, and then I've got a garage full of boxes. I got to or a truckload of boxes I got to unload into the garage, and a lovely wife who I haven't seen in a couple of days, that I got to go spend some time with. So, hit me with your questions. We got 15 more minutes. If there's something we want to look at before the hour update, let me know. I'm still looking at that potential short on bonds. As you can see, remember, we had compressed volatility, volatility expansion, and now no fill on the upside. So on the hourly, as it stands right now, I would be looking to go short the 30-year, the bond, on a sell stop below there after we close this candle in 15 minutes, not anytime sooner. Congrats to all who did buy this dip down here. Good on ya. So far, it's feeling okay. I'm going to let this craziness play out. I'm really just sitting in my Aussie long gold and silver. And then, yeah, I got nothing to worry about there. See you, Kistus. Let's make money. See you tomorrow. I like it. Yeah, now they're really kicking it up, aren't they? $60-minute. Yep. Yep. NASDAQ, S&P, Dow, everybody. Interesting thing could be a Feldvall breakout on the VIX. If we get below yesterday's low, that could really cause some major reversals. I'm definitely going to be watching it. I'm not a vol trader, but yeah, this is expected. So that Feldvall breakout on the 60-minute, it's going to be a short on bonds. It'll be a long on, that would be on the 60-minute Russell, NASDAQ, S&P. So pretty much everywhere. Pretty much everywhere. Any questions? We got about 10 minutes to go before I'm gonna wrap up. Good to have you, Kestis. I'm not sure if you're still here or not. Sorry, I saw make some money. Good to have your energy. Dollar's bringing it back, huh? Dollar back from the dead. NZD, let's have a look. What time frame? So I have lightened a number of positions on equity indexes. I've taken off some NASDAQ and Russell. 1 hour and 15 minutes. Okay, Bob, let's hit your question real quick. 15-minute was a vol breakout down to the midline. Nice trade. 60-minute, that's the continuation down trade. I don't see it on the 60. David, morning, Chris. What's up, buddy? What types of analysis do you run on your back-tested data to optimize your systems? Okay, so, oh, wow. Look at that. NASDAQ. So I keep track of max favorable excursion on my trades. So let's say I did let's call this one a vol breakout. So I'll say, okay, buy stop, actually here, buy stop below there, boom, and then stopped out at break even. I'll keep the last tick so that I know the total range of the move, so I can get an average sense of what the moves are. And then I'll say, okay, well, what would happen if I did, let's say, what would happen if I did plus 1.5 hour profit take and move stop to break even? And I can go and look at that and then say, okay, yeah, that's a good trade. I'm going to go ahead and do that. And then, you know, kind of like across the board. I'm not sure I'm going to take the bond trade. I'm not sure I'm going to take any of these today. It's very strong bottom. But I'll also keep track of the market regimes. I'll keep track of a number of different data that I collect on my systems. I'll keep track of all that, and then that'll give me, like, I can see what works better in like a bull quiet. So let's say instead of running just a 1% risk, I can run, let's say, 1.5% risk in a bull quiet because I have extremely high win rate. Then 40, nice, okay. Sorry, I'm not sure if I'm answering your question as you would love it, but I'm a little off today too. I didn't sleep all that well. Wife got in really late and waiting for her and all that. So, all right, yeah, I'm not going to take any trades. The move from here to here is to the midline is not long enough, so the risk is not there on the S&P or on the NASDAQ. It is. It's there on the S&P. 2.1. Definitely there on YM. I'm sorry, 1.1. So that's 1R, 1.1R, 1.5 almost on that. Okay. It is there on EMD. EMD, we have at least 2R, it looks like. Well, that's 1.5R to midline on EMD, so that's worth doing. And Russell. So Russell has it to the midline too. So 1.5 to the midline. Not calling this the bottom of the market, but that would be a place to trade it. And then let's have a look at ZB. ZB looks like it would be there. Yep, same with ZB. So failed vol breakout on to the downside on ZB, to the upside on Russell and EMD. So maybe take, and in my mind today, we would be doing a lot less position sizing than normal, even though that gives you a really nice setup. It's just that markets are a little wacky at the moment. So yeah, that's what we're doing. Any other questions, guys? My apologies for the little break in the middle there we had. That was happens. Yeah, I think that's it. I'm not going to do the trade. I'm not taking the trades. The thing about it is, remember, you know, the scariest trades to take are usually the best ones. I know that I'm not going to be focusing on markets that well today, so I'm not going to take the trades. That's a key rule for me. I can focus on my end of day swings with the Aussie, but ciao, Tom. You know, I can do my end of day stuff, no problem. But yeah, I would rather spend time with my family, get a little work done, and let the market turn. I don't need to catch a bottom tick. That doesn't mean that much to me. I would rather get get the meat in the middle. Sometimes we get lucky and we can catch a good bottom tick, but failed YouTube breakout. Not sure I follow. Okay, I'll just lay that trade out there. So on the hourly, it would be a buy stop a tick above the previous hour's candle. So a buy stop above here with a target in the midline. Looking pretty good in there. Anyway, thanks guys. Have a great day. And as always, I'm going to make sure I put my favorite face forward.